Okay, this is Rick with Hit and Run Candlesticks. We're having an open house today, and we're going to do several little videos of subjects, topics that we're going to talk about in the room here, and this will be the first one here. So good morning, everybody, and let's get started. All right, the very first one that we're going to talk about is the dotted deuce. So what the dotted deuce is, now some of you, I'm going to repeat this, you're going to hear it again. What the dotted deuce is it's the dotted line, dotted red line you see on my chart right here. Right there, okay? Right there. It's a modified 200 period moving average. Let me grab this right here. Edit it and bring that down. You can see exactly what it is. It is a 200 period moving average, and then we've modified it. We've modified the average type to front weighted. Out of the box, when you open it up, it'll probably come simple. That's my guess. Different programs may be a little different, but it'll either be simple or exponential. I've modified it to look at the front weighted, and then the average of, it's the low. Right out of the box, it'll come last price. Almost all, I can't imagine anyone else, any program coming up with something different. So last price is what it'll be. And then we've modified it to use the low, okay? So it's the 200 period moving average, it's the front weighted, and it's the low. Let's put that to bed. There you go. Now, the rounded bottom, or the dotted deuce was created a few years ago, and it took me over a year to mess with this thing, to get it where I was happy. And the origination of this came because of the rounded bottom breakout. I wanted something, there we go. I wanted something that was in between the 50 period moving average and the 200. Now, I know the 100 is usually in there. I know that. But the 100 was not accurate like I wanted. I wanted something that price seemed to always migrate to. Price could be below, and I wanted something that always migrated to it. You see, I use moving averages an awful lot with trading. I don't use a lot of them. I use the T-line, which is the 8 EMA. I use the dotted deuce, which is the 17 EMA. I use the 50 period moving average, simple. I use the 200 period moving average, and I use the dotted deuce, which is a modified 200. I also have the 500 period moving average up on my chart. Very, very faint. Unless you are absolutely looking for it, you probably couldn't see it. I can barely see it. But that's all I use on a chart for moving averages. But I use them a lot. So in my mind, because I've seen it with the 50, I've seen it with the 21 EMA and 20 simple, I've seen it with the T-line, the 8 EMA. I've seen where price always wants to go to them, always. And it can act, those moving averages can act as support, or they can act as resistance, depending on which side the price is on, right? Well, I went on a hunt looking for a moving average between the 50 and the 200. And I got to tell you, there's several that's very close. So it took a while to finally hit the button and decide this is the one I wanted. And it turned out to be this 200 modified moving average. I thought a good name for it was, I made it dotted so it'd be different, and then I just painted it red, same as the 200, because it is a 200, and I just thought the name dotted deuce would be, I don't know, a nice name for it. So that's what I was looking for, okay? Now, let's put price back on here. Price. There we go, price back on here. Let me shrink this up a little. There we are. So what we're looking for is price in a rounded bottom breakout. The next topic we should talk about is probably the rounded bottom breakout, wouldn't you think, after this one? The next time, yeah. But right here, look at the dotted deuce. Right there. Look at it right there. And it's crazy the amount of times that this happens. Look at that right there. Look where we opened up, right there. Now, you're thinking, so what? Go look at the rest of the chart. These things amaze me. This kind of thing where, there we go. Where, let's see, I can't make this any bigger, then I won't be able to see it all. But look right there. You smacked right up against the 200, and you can see right here, the dotted deuce took those candles on, stopped them cold, right there. Look at it right here. Look right there, right next to that big black candle right there. There's two candles stopped right at the dotted deuce. It just happens way too many times. So when you see that happen in a chart, when you see repetition, when you see that, why does this happen so much? Maybe stop figuring out why and just do it. That's the kind of person I am. I'm not going to spend the time to figure out why. I'm just going to do it. So anyway, the dotted deuce became the big winner, and it has made trading for the rounded bottom breakout so much easier. It gives an absolute target. I will bet every single time that you get a pause, a pullback, or a rest coming up to it. And if we break out, that's always a buy area, because the next target is going to be the 200 period moving average, or awfully close to it. Okay, awfully close to it. Now, let's go look at, I think there's a couple rounded bottom breakouts on this. Merck. Look at Merck. So here's what I'm going to do with Merck. First, a rounded bottom breakout. All right, a rounded bottom breakout is all about a chart that's been beat down in a downtrend. Spanked, beat up, just down, 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 down. You can clearly see that Merck has just had a bad time here. Bad time. Well, all of a sudden, Merck might be coming back up. And it tried right here. It tried right here. It tried right here. It tried right here, kind of close. Didn't even get there, and it's trying again. Now, what makes this different? Not a whole lot, okay? So, not a whole lot yet. But one thing that's different about this one is we've actually held above that 50 period moving average more than we have here in the past, okay? So that's one thing that makes it a little bit different. So what I want to do here is I want to make sure that there's enough room to make some money. Well, from down here up to the 200 period moving average is 17%. I would say that that's enough money, wouldn't you? So we don't have to be in a hurry to buy it here. And by not being in a hurry, that makes you a better trader. We can let it set up a little bit better, okay? So one thing I'm going to do is I'm going to take from our failure right here. Here we went down and came up toward the 200, it hit the 50, and we failed right there. And then I'm going to put these lines on there. And this is a combination of quadrant lines and two fib lines. There we go. All right. In this area right here, I'm going to draw a little bit of a, I'm not going to draw it the whole way. It kind of messes up. No, I am. There we go. That's the construction area for this chart. It's okay to buy in the construction area. Nothing wrong with that. But once it breaks out of 85, I think we're on the road. 85 will be the key point right here for me. And that's going to be this high right through here. Okay. So we are now in a rounded bottom breakout setup. How I'm going to set my targets up here, I'm going to put a line right here on the dotted deuce. That goes without question. I never miss that. And same with the 200. Now from there, we can look at some price action and see if we need to do any of that. But see that line right here? So I'm going to put one right there. And if we look on the left here, let me get my little crayons. If we look at the left, can you see how that little line just might be kind of important? See where price came down to it, bounced, finally went through it, and then from below it, it went up and bounced. That means that's kind of important right here. You can see a little bit right here where we bounced up. So that's kind of important. Okay. There we go. So right now, this might be a buy for folks. I'm probably going to be a little patient. I want to see what it does right here with this. Let me check a couple of things over here. Yeah, I want to watch what it does here. We'll talk about the cloud in a little bit, and I do watch the cloud on the other monitor. I'm not a cloud connoisseur, okay? I'm not a cloud connoisseur. I'm not that. I use it very probably sketchy compared to some folks that use the cloud, but I will show you something here that I use. So let's go look at that right now. So I'm going to come over here to the cloud, and we're on the 60-minute chart. So I want to see how it's broken out right here. I want to make sure that it stays above this part of the cloud right here. And I don't have to be in a big hurry, and I'll show you why. I don't have to hurry up and get in for fear of, I'm not going to make as much money. I don't have to worry about that because I see a path to profits. This is my target area. That's never going to change right up here. So if I wait for this breakout and maybe buy at 82.90 up into this area is 15%. That's plenty money for me. And I think that's plenty money for you. And that's on the stock. I'll buy an option, so that'll be a 30-40% option right there. Okay? So that's plenty money. So I'll wait for Merck. I've got Merck flagged. We'll keep it on the watch list and keep an eye on it. So what we're looking for on the rounded bottom breakout is the 200 and the 50 period moving average spread out, giving them an oversold condition to each other. The 50 period moving average is oversold to the 200. And if you look back through any chart you want, anytime a chart moves way down below the 200, below the 50, comes back up, it fights to move back up toward the 50 and then back toward that 200 period moving averages. Those are very, very popular moving averages. So this thing is on a fight to get back up here. So use that to your advantage. Okay? If anyone ever has any questions, please let me know. We can come back to this. For the purposes of recording, we're going to cut off the rounded bottom breakout right now and hang tight, and we'll figure out what we're going to talk about next. Hey folks, recorder's back on, and we're going to talk about the trendicator and the trend, okay? So just a second ago, I pointed this out, and I am going to do this again, okay, folks? So I pointed this out right here. We can draw a line from this top down to this top and extend it all the way. And then what we're going to do is we're going to say, well, that was a trend break right there. So now the chart becomes bullish, okay? So we draw a line, trend break, now we can be bullish. What I would rather do is follow these dots, green and red dots. And by the way, all this is the 17 EMA. You can use the 20 simple if you like, the 21 exponential. I know a lot of people that do. I choose to use the 17 because it's kind of in the middle of all of that, okay? Another thing is there's nothing magic about these dots. There's nothing magic about the 17 EMA. And there's certainly nothing magic about the 21 exponential or 20 simple. There's nothing magic really about any moving average. But there is magic. And the magic is how consistently you use it. That's what's magic. Okay? So you're building a world, a trading world around your magic is what you're doing. So let me explain. So my magic is all around price, the T-line, and the trendicator. Everything I do is in that area right there. Everything. If I use the 21 exponential for the green dots, that would be my magic. I don't. I use a 17. Again, it's not the moving average, it's magic. It's being consistent with it. So I look at this, and you can see the red dots. Well, I'm in a downtrend. I don't need to draw any line or anything. See how they switched green? We are now in an uptrend. Here's something else I believe. A trend is a trend until it's no longer a trend. I know that sounds kind of corny, but just try it out for a while and think about it. It makes perfectly good sense. A trend is a trend till it's no longer a trend. So it doesn't matter what all this price is doing here. Doesn't matter. A trend down is a trend down. A trend up is a trend up. And I define as trend as, are we above the trend indicator? Okay. A trend for me is more like my trading trend. I don't care about any other trend. It's my trading trend that I want, and that's what this is. When I do draw a trend line here, what I will do is draw from where we turn to the very last dot. That's where I will draw a trend line when I draw a trend line, okay? Now, we all know that trending stocks do this. If you don't know, well, now you do. All trending stocks, we'll do it this way. All bullish trending stocks move up and then move down, move up and then move down. And darn it, sometimes they even move down further. Then they fix themselves, they do whatever, they fix their hair, take a shower, who knows? You know, eat a cookie, ice cream, who knows? And then they get back in target. And then they'll start doing this again. Well, that's what a trending chart looks like. This is what a trending chart looks like. Okay? That's what a trending chart looks like. And now we're working on that next move up. So, because my world is all about that small little area right there, and it's this area, it's this high and that trend indicator, price and the trend indicator. Everything between the high price and the trend indicator is what I'm interested in. So when it sets up in our chart pattern, we can start looking for trades. And again, the trend indicator just keeps me on mark, is what it does. It just keeps me, somewhat organized. I don't have to, we fall below and it turns red. If I continue to hold it, well, it's definitely on me. Okay. So now we're going to look for entry area like 3-8 trap or something like that. Does that make sense, Darun? So let's talk about this a little bit. The lines I put up here on my chart, any chart, it's a combination of quadrant lines and 2 fib lines. And if I'm taking it from these highs, I don't usually go to the very high. I go where there's multiple touches. So there's multiple touches here. That's why it's off the high. And then I go down to the low. And these bunched up lines here, this is going to be the 50% retracement, all right? Now, I'm going to draw a line here and make it go all the way across, okay? Do that, there we go. So I'm looking at that as my major target. And and it doesn't mean that a chart is just going to go, up to that target like that. That's not what that means. Because we are going to have pullbacks and then move up and pullbacks. You're going to have those. That's just the way a chart works. It's breathing in and out, in and out, in and out. And this line I've discovered is way more important than I've ever imagined. So think about this now. We didn't look at anything on this chart. We can do this with any chart you want, by the way. We didn't look at it. Byron there pointed out Ford. So let's look at Ford. I start here at the top and I go down at the bottom. Now, that 50% mark, keep in mind that we didn't look at anything else, all right? Look at how many times we get into that 50% area. Look at that. We pulled right back to the 50%, acted as support. Here we're down, and we actually gapped up right here. We were actually below that 50%, gapped up, and then it looks like we went right back down. Look right here, right there at that 50% mark. There's one right there. Crazy. Look right here. Look at that 50%. See, to me, that's important. That's a very popular spot. And we had nothing to do with the back here. Nothing at all. We had zero to do with that. All we did was go from this high to this low. That's it. We were measuring from this point to the next lowest point. And these things just amaze me. So the likelihood of it getting back up here, I think, is pretty darn good. A good probability. Very good probability. So I see Ford going up here to 1150 right now. And then we'll, look at the rest later here. Thanks, Byron. Nice chart. Ford moving up. Hey, Trader X, how you doing? ALB setting up. It is. Wow. Mercy. Flag that one. That's a nice chart. So let's run our numbers here. Here we go. Before I place a trade, I want to ask myself, what's the path to profits? And from this breakout right here to the 200 is 30%, 31%. So I would call that a good path to profits. Up to the 50% retracement is 19%. I would call that good too. Now that's just the stock. You option traders, you know what kind of numbers the options bring out on you. So that's a very nice chart right there. Flag that, keep that one. Thank you. Roasted, she bought some FLR. Thank you, Kathy, appreciate that. Nice flag, 3 trap, probably a 3 trap breakout here. Let's look at the weekly chart. Yeah. Nice. Thank you. Willie, when did you buy that, Willie? Did you buy that today, Willie, or were you in it already? Or yesterday? Yesterday? Sweet. Willie just closed this thing out for what? 105%. You rock, Willie. Okay, so everybody give Willie a pat on the back. He deserves it. Now, let's stop looking at this big old candle right here. And let's take a look at this chart. Okay. Popped up big time, took its time moving down, moving sideways with a slight tilt to the upside. Okay. Now, we move up and we pull back and we have a 3-8 trap here. And Willie, I don't know if you bought it because 3-8 trap. This is just what I see in the chart, okay? We have a bullish engulf, engulfing a doji right here. What a great chart to take a risk on. What a great chart. And rewarded well. Nice. Way to go, Willie. Okay. All right, I've been over here chatting. I've got some things over here that I've neglected that I need to stop neglecting. Take a look at VRT. Look at VRT. VRT is a buy right now, by the way. Next target up is 130.30. Yeah. FCX. Yesterday I was down on FCX big time. Well, maybe not big time. I added to my FCX yesterday, and it's moving up pretty nice right now. It's flirting with the 500 period moving average right now. If it can get through that 500, my next target up is up here above 45, 46. SMCI still hanging on here. Yeah, Sono's moving up. Okay, so Sono, to me, I think this is a lot of trash, not worth the risk, for me personally, okay? I mean, hey, if it goes, it goes. That's great. But I want to ask myself, where's my path to profits? I always want to ask myself that. So I know, because I think when you're not looking at profits first, I think what's happening is you're doing yourself a disjustice. You're just looking at the chart, and you have no, you don't know where you want to go, and I always want to know that. So this is where I'm going to pull this up, and I may have to change this, but we'll try right there. No, I think that'll work. Yeah, that'll work. You know what I am going to do? I'm going to tip the scale a little bit. Bring that down, just a little bit down. And the reason is where that shooting star is, that's where I want that line. Because it was so close. I mean, it was really, really close. I just made it right there. Okay. So now, my major profit target is right here. Whoops, I did it again. Hold on. I'm thinking, let me do this. Okay, the recorder is back on for this one. We're going to talk about SOUN. We're going to talk about the quadrant/fib lines, breaking out targets, and target to path to targets is what we're looking at. So, as I mentioned earlier before I turn the recorder on, all this is it's just too risky for me. A lot of garbage right here. If it breaks out, fantastic, absolutely fantastic. Okay. I drew our line from this top down to the bottom, and that gave us all those lines inside the chart. Okay. Now what I'm going to do is I'm going to draw a line here at the 50% retracement area. And that's going to be my main target. Okay? That doesn't mean that price is in fact going to get there. It might not. But if it got halfway there, I would be tickled pink. My next target up is going to be right here. Now that's based on those lines. We're going to add a couple other lines for price. And by the way, setting targets is the easiest thing in the world. It's peaks and valleys. It's where bulls and bears have a battle. You know, it's like right here. There's a battle right here between the bulls and the bears. And it's a peak, so I'm going to put a line there. There's already a line at that peak. So now I'm good. I'm going to put one more line on. See over here, where the bottom of the gap, the upper side, the upper bottom gap, if that makes any sense. Right there, I'll put a target. There we go. Now, what could I possibly make on this trade? So let's say there's an entry around 1070. And up here, that's a 35% trade. A lot of times in trading, and I think a lot of us are guilty of this sort of thing. I think we are. I could be wrong. But what happens is, you know, you buy into the stock. Let's make that a little bigger. 3. You know, you buy into the stock. It goes up, and maybe it goes up one more time. And then the stock, it pulls back a little bit, and then you close it out. The first sign of trouble, you close it out. Now that was your chart up there, or your target. You close it out, and then the next day, or maybe a couple days later, you know, it starts doing this right here. Oh, darn, you kick the chair. But what happens is you never look at the stock again. Never. If you take the time to do the work on the chart, don't throw the chart away. Trade the chart. So I get it. You may have gotten out, taken your profits. I'm all for that. But keep an eye on it. When it sets up again, look at it again. That's still your target. Your target never changed. So, you know, maybe you get back in it when it starts to break out here. You get back in it. You know, and then maybe you come up to another place you see where, well, we had a target line there. And by the way, targets are resistance. And then it starts putting in some sort of a, you know, a candle that you'd rather the candle be green, right? So, all right, I'm taking my profits. Okay. Well, maybe it moves down another day and you think you're the smartest cat in the room. Maybe it even moves down another day. No worries. Man, I am really a smart guy. And then all of a sudden the bulls step back in. All right, I'm going to start watching this again. Starts moving up. It takes out that previous candle, so now you start buying. And now we're going to get up there, okay? And now you're up there to your main target. You may have gotten out 2-3 times, and shazam, you're up at your target. Man, that was a nice trade you just made. Nice management. So that's something to think about, okay? So when you're looking at a chart, man, that's a nice chart. Just stop right there and go figure out what the chart can do for you first. You know, everybody wants to know, is this the entry? Is this a buy? Where do I put my stop? I'm not trying to make those small. Those are very important items. I would like to see everybody add something in there. Where's my path to profits? And that's my path to profits right there. Okay. So anyway, I think it's a great looking chart. I don't think it's a buy for me because I don't like all this stuff right here. I would rather for it to break out. So what I'm going to do is I'm going to put a little bubble up here. That'll tell me that I'm interested. I'm also going to do this. Make that, I guess I could just do that, right? S-O-U-N. I do that to keep on my desktop so I can see charts that I might be interested in for later today or just sometime. Okay, so that was my trade plan. There's my trade plan on S-O-U-N. I don't need to buy it right now because we are running right smack dab into a resistant area. And there might be too much of a chance for this to happen. We're up and now we pull back. And if we start up in here, well, now we're starting to get into my bubble, aren't we? And that's what I want. So that's my plan. Devendra, does that make sense on for your question there? Oh, recorder. Turn the recorder off. Recorder is back on, and we're going to talk about a 3/8 trap. So a 3/8 trap is nothing more than an entry. That's all it is. Okay. So a 3/8 trap is nothing more than buying close to the T line. That's all it is. Because what we're using is the do I not have it on here? Wow. Okay, recorder is back on. Let's finish talking about the 3/8 trap on Disney here. So this I'm recording this and we're talking about it, not for the fact that what is Disney a buy or anything like that, because somebody might watch the recorder 5 years from now. The focus on this is the 3/8 trap, okay? That's the focus here. So here you've got Disney moving up. It isn't a 3/8 trap. What a 3/8 trap is just simply, it's an entry mechanism. And it's an entry mechanism where price is below the 3 EMA and above the 8 EMA. So basically price trapped inside those two moving averages. So really, all of this could be a 3-8 trap. That's a 3-8 trap. This was a 3-8 trap at one point that day. Look at that. That's a 3-8 trap right there. 3-8 trap right here. 3-8 trap right here. That's all it is, okay? So let's not make too much of it, although I think it's probably the greatest entry mechanism I have ever seen. But there's more to it, okay? Thanks, Ed, for posting that. Yeah, for those that take $7 trial, 30 days, we'll get into this much deeper. In fact, I'm going to announce something right now. If I can put it together in time, the very end of this month, it has to be. The very end of this month, I'll have to look at the calendar. We're going to have a fast track trading for current members, I'm very sorry, for new trial takers. So anybody that has a trial, we will dive into these setups a little bit more and helping you out with that. Just fast tracking some of these setups, the rounded bottom, well, all of them, everything we're talking about today. We'll do that. Well, I'll talk about that a little bit more, but you've got to have that $7 trial in there. Okay. All right. So now what we're looking for is obviously for the price to move higher, right? But a few things that we want to do. Number one, what is the market doing? What is the market doing? The market's bullish, isn't it? I think we can all agree upon that, all right? The market is bullish. I'm going to come down and look at T2123 because I do this. Not all of you have this, and maybe you have something else, but this is what I do. That's bullish. It's starting to work, okay? So the point I want to make there is the market has your back. The market is in the right direction to trade long. So let's look at trading Disney long, okay? Let's look at that. So here's Disney trading up in a trend, and you guys all know how I draw a trend. I'm going to draw from where we turned red to green to the current dot. That's how I'm going to draw that trend. And now we can clearly see just a little bit of Disney here. We can clearly see that it goes up, it rests, it goes up, it rests. Just a slight little climb right there, and then it went up, and now it's resting. So if Disney continued to do this, wouldn't it make sense that Disney's headed up here? So up, rest, up, rest. Wouldn't it make sense? Because a trend is a trend until it's no longer a trend. Now, I got to tell everybody that there's not a soul in the world, that can tell you when this trend is going to break and fall apart. Nobody can tell you that. They can't. So we trade that trend until it's no longer a trend. You take profits into strength, a few rules there, okay? We talk about that more in the fast track class. So right now, here's Disney setting up. We've pulled right back to trend, and we've got this cool little, I'll use this right here. We've got this cool little chart pattern right here that I'm going to call a pop out of the box. You can call it a flag. You can call it, just consolidation, whatever you want to call it. I don't care. But it's a nice, tight consolidation. So now the choice is to buy Disney in this area here. We're in a 3-8 trap. Actually, we're just breaking out of a 3-8 trap. Or you can buy the pop out of the box. That is your choice. I know people that will wait for the pop out of the box and then wait for the pullback, which seems absolutely insanely ridiculous to me because it's like a vicious circle. Here, you waited for it to pull back, but you didn't buy it. It popped up. Now you're going to wait for a pullback and you didn't buy it. I could do this all day long. I could go backwards all day long, and it's always a pop out sideways and you didn't buy it. It pops out. Well, now I'm going to wait for a breakout because I want a cheaper price. Well, you don't have to have a cheaper price to make money. I have proved that several times. I do want to take a look at the weekly chart here. See where we're at on the weekly. We are right here at a top. right here at a top. And you know, I was in my mind as I was looking at Disney here, I was thinking, you know, I just might buy this. And I think now I'm going to pass on it because we're at this top. Look at that. We've got, here, let me draw a different, I like the Disney chart, don't get me wrong. See there? Here we failed. We actually failed there, hit the bottom of my red. We're right there right now. So what if we waited for a breakout? A little higher. What if we did that? So we've talked about path to profits, right? This is all your profit area right up here. That's your profit area. I'm going to draw our line up there, our main target. So there's the main target right there. So I'm going to see if Disney can push out a little bit more. And then that's a 13% trade. So there's a little bit on the 3/8 trap. We'll talk about that more. But I do love the chart. Nice tight consolidation. You've got a hammer here. Nice 3/8 trap. And certainly tradable. I just want it, you know, I'm looking for a target of way up there. Here. And there's too much drama at those tops. So I want to stay away from that. So anyway, that's just a little bit on Disney, okay? Let's see. How come you don't sell your SMR? William, are you talking to me? I don't. Yes, well, I don't own SMR, so I can't sell SMR. Yeah, I don't own it. Let's see. Yes, Kevin, TGT is a great RBB. John, do you use the 3 low for downtrends or just high for uptrend? 3 low for downtrend and 3 high for uptrends. Yes. Yes. All right, I want to run through some stocks. So far, I've just done nothing but look at everything you guys have. I want to run through a few charts here myself. Too high to buy, no. CELH, one I would certainly put on that watch list here. If we could get a little bit of consolidation, that might be a nice one to buy like that. Reddit, I think Reddit is still a buy, and Reddit still has a target up here. For those that want to trade NVIDIA, but NVIDIA is maybe too expensive for you, you might take a look at NVDL. It's a 3/8 trap breakout right now. I better record this. So when this is all about stocks being below the T line and back above the T line, okay? One thing I like about the Trendicator is the Trendicator can show me here, see how it goes from red to green? That's when price is below the Trendicator, then it pops up above the Trendicator, it turns green. Now, if anyone has TC2000 today and you want this on your charts, I can show you how to make it, okay? It's really easy to do. I'll be glad to show you how to do that. So I really like that. That tells me that the stock is, as far as that trend goes, we're bullish, okay? We're simply bullish if we're green. Right here, we're simply bearish until today, and we popped up. So I'm going to always be having that in my mind. I'm always going to keep an eye on that. Now, what this scan is that I'm looking at, that we're, a few charts we're going to look at here, are stocks that, maybe I need, let me go check this before I go mouthing off too much. Yeah, I might be mouthing off too much, but that's all right. We'll fix it real quick. Anyway, I'm looking for stocks that are moving up like this and crossing back up over the T-line. Now, we can cross back up over the trend indicator as well, or the trend indicator can actually be like this, green. See how we're green? And we cross back up over the T-line. See how we're green? And then we cross back up over the T-line. It can be that. So I'm looking for basically price below the T-line that's moving back up. With that said, give me 1 second. Okay, as I said today, we're going to have little mini classes on what I call my flagship setups. And one of my flagship setups is where we cross back up over the T-line. Now, I'm going to move this over because it'll just go behind the screen. But here's something that I want. The basic of it is I want a trend. I want a trend. And we have a trend here. I mean, see the red trend? I want the T-line to be above the trend indicator. And see the T-line right here is above the trend indicator. And I really want to see price above that too, like this right here. And then I want to see a pullback. Well, the pullback, you can have pullbacks that come to the T-line. You can have pullbacks that go below the T-line. But still, the trend indicator, let me get my pin out here again. Still, let's eliminate price for a second. The T-line, which is that black line, remains above the trend indicator. Price is crazy. Price is nuts. Price is full of drama. Price is, I don't know, Kim Kardashian on drugs. It's a drunken monkey. Look, I think price is king. I really do. But I think the king drinks too much, and it's all over the place. So sometimes we have to look away from price, and not necessarily when buying it, but when in the background, when you're scanning or you're looking for charts, that's when I think price needs to be eliminated to some extent, okay? To some extent. I'm still going to look for, say, this part right here. I want it trending. And if in the scan I use says I want price above the T-line and T-line above the trend indicator, well, you do care about price. I want it up, right? So when we have the pullback, some stocks don't always fall into that 3/8 trap that we talked about earlier, where it's above the 3 EMA. Some stocks fall below let me back up here. Price, some stocks don't stay above the 8 EMA, like on the 3/8 trap. Some stocks fall below the 8 EMA. Well, I don't want to throw those out. I want to, they're in my world. I want to be able to see them. And then I want to see them only, though, when they cross back up over the T-line. That's the only time I want to see them, like AGNC here. I have no interest in AGNC yesterday. None. I don't care that it has a hammer. What I care about, it has follow through. Now I can go, oh, look, it has a hammer. Good for me. That's what I'm looking for. Now that throws us into a 3/8 trap. Okay. But what it does is it puts that we put that low in, and then now we're getting that snapback. So here we are. We rally up. Oh, notice we're hitting the dotted deuce. We talked about that earlier. I got to tell you, it's a popular moving average. We pull back, and now we're snapping back up into this trend. Snapping back up into this trend. Because now what do we have? Let's see here, pen. We now have price now is above the T-line. T-line is above the trend indicator, right? And the trend indicator is green. So AGNC, nice looking chart here. So that's what I'm looking for. That snap back up above the T-line to get us back in the game. RXRX. Look at that. I mean, there might be things about this chart that some people don't like, but if we clean things up a little bit, you got to love the big bull run. You got to love the pullback. So where are you going to buy it? Now, here's one where it failed, right? We're below the T-line. It snapped back up above the T-line, but we went down again. True. No chart pattern is perfect. Here we are down again, and now we're snapping back up. The difference this time maybe is we've got a morning star signal set up. That could be the difference. But that's that snapback I'm looking for right there. Always look through several charts. You might find some that are better looking than others. And there we go. Oh, we already looked at that one. I'm going to flag that. Take a look at XLI. Look at XLI. Nice, smooth, clean chart. Look how we rallied up. Oh, we hit that dotted deuce again. And we also hit the 50% retracement. These are things to take note of, okay? Here we pull back. Notice the T-line stayed above the trend indicator. Price is what turned the trend indicator red. And now look at us snapping back up. This one right here is a candidate for a buy. YNN. I don't particularly trade. In fact, I never trade gappy charts like this. But this is doing it right here. T-line stayed above the trend indicator. Price fell below the trend indicator. Now we're snapping back up, right? Where do you buy XIB? Nettie, the question is not where I buy an XIB. The question is where you would buy XIB. There is no right or wrong answer, okay? There just is no right or wrong answer. I can tell you right now that I would probably not buy it right here, personally. I'm not going to. I was hoping I could, and I would just buy it right here, right now, with you. But I think I'm going to have to wait. I'll tell you what. We close over the dotted deuce, and I'll buy that. I'm going to set an alert on it. This is where I will buy it, okay? I set an alert. Now I don't have to worry about it. So here's the thing. I'm willing to give up money and buy higher because I think it goes higher. Now, I'm going to buy it here a little bit under that 50% retracement. I'm going to take the bet, a bit risky, that we break out of that 50% retracement and we run up to the dotted deuce up here. So now I want to do some backup here, and I've got the recorder still running. This is good. Now there's things we want to check on. For instance, how's the market doing? It's doing pretty good, isn't it? Okay, that's a check mark for me. Now, let's go check T2123. Are we still showing strength? Yes. Is there any strength coming into VXX? No. Okay, I like that plan. I like that plan. So, what was it, XBI? There we are. So far, this looks like a trade, but again, I will wait till we get, we close, or we get over that 84.65 area, okay? So that's what I'll be looking for there. Make sense? Let's take a look at CMCSA here. You can see that the chart has a slight tilt to the upside, right? You can see that, right? Slight tilt to the upside. So it's traveling up, okay? Now what we've got is, we're in a rounded bottom breakout, by the way. Here we are, price below the trend indicator. This one, the T-line did sink down a little bit low, and now we're coming back up over the T-line. I'm going to flag that one right there. Now that may be a turnaround starting to move up. So what I would challenge everybody to do is put the T-line up there on your, the trend indicator on your chart. This is not going to be the best one to look at. But when it goes from red to green, see red to green, we don't care about two little things like that. But red to green, see the run you can get, red to green, the run you can get, red to green, the run. This one's kind of wonky in there. This may not be the best chart to look at, but going from red to green really, really makes a difference. This is another one of these charts where we've crossed back over the T-line after being out of it. PFE, this may be a nice chart to look at here, and it's a rounded bottom breakout. Notice how, well, right there at the dotted deuce, I'm telling you, that is a powerful, powerful moving average. Let's do this. So here you can see the T-line, whoops, too big. T-line is above the dotted deuce. So the black line is above the green dots. Price has dropped down below the T-line and now is coming back up. So that's like a little dip, you know, buy the dip kind of a thing. When we have a bullish trend, we keep our green dots. That's a nice bullish trend to me. We get below the T-line and then bounce back up. That to me is buy the dip type chart. We're going to do a snapback and get back up and play with these highs, or try to move up in these highs anyway, like that, okay? The 50% retracement is right here at 26.18ish. There's the 200 period moving average. That's a pretty nice chart if you ask me. Okay? Pretty nice chart. All right, let me turn the recorder. Okay, recorder's back up and running, and we're buying some NEM here. And I bought it out of the money. And the reason I bought it out of the money is I have two accounts. One account that has plenty of money in it to always buy, say, at a 70 delta and pay whatever price it may be. But the small account is where I bought it, and the small account doesn't have a lot of money, about $6,000. And so I have to adjust pricing somehow. And one way I do it is buying it out of the money. It's cheaper. So, you know, I get a lot of flack from that, from people, you know, why out of the money? And we're all taking a bet, no matter what, okay? Me, I'm betting that the price is going to move up. I'm going to take that bet. And it doesn't matter where you buy the money. If price goes up, I mean, let's say right here is at the money line, okay? This is in the money and this is out of the money. If I buy it down here and price goes up, well, guess what? This is going to go up too, okay? So one way for me to buy, one way for me, come on in, you can come in. What? Sorry, I have grandbabies here with me. Here, give me 1 sec, okay? Give me 1 sec, 1 sec. One way to afford more expensive stocks in a small account is to buy out of the money. So I do that. I don't have a problem with it. Everything I do is about the chart, not about the options. So if the chart goes up, the price goes up. And we make money. Those that bought it, say in the money, will make money. Those that buy it out of the money will make money as well. So anyway, that's just a little bit with that, okay? Let me close that. Yeah, we'll talk about chart in just a minute. Let me get posted up here to the app, PLTR, bought PLTR. What was it calls? November calls, 120 strike. There we go. So that's posted over there, posted up here. Again, if you have the app, you should receive this. If you have the app and you're not receiving this, you might want to delete the app and then reinstall it or something like that. So we're long PTLR. Let me explain a little bit what I'm looking for here. PTLR, what did we do? You can see here that we broke out right there, and that was the 50% breakout line based on our, we started right here at the low, we drew a line to this top, we drew a line to this bottom, and then that gave us our lines up here on the top. And you can see that we've just, so far, we've obeyed that pretty good. Now that we've consolidated right here, we're starting to get this breakout. Next target up will be about 134.90. And then, I don't really know, probably should look and see what that is before I go deleting it. Yeah, I've got no idea what that is. So let's get rid of that. There we go. There we go. And then the next target from there will be around 147 up here. Okay. So that's the reason I bought PLTR. Remember, everything in a trend stays in a trend until it's no longer a trend. So what are we going to look for at that point? Well, we want to look for consolidation and rest to give a reasonably good buy. So here we rallied up, put a shooting star in. Shooting star pulled price back. There's the consolidation. And here we're breaking out of that consolidation. So that's the reason I'm buying it. You can go back and look at this chart, see how we rallied up, popped up. I mean, this could have been a buy in here too. Here we rallied up. I'm going to take it from here. Up, down. See that consolidation? That gap might have even been a buy. Here we are up. We're down. Remember, I like that cross the T-line setup. So that could have been bought right in there. Could have made money on that swing. Here we are back down. And now we cross back up over the T-line. That would have been a short little profit area right up here on that. But overall, one of the most important things to look at on this chart is the trend. Look where we went from red to green. And I'm just going to put a line on the last green dot up here. We are still very much trending, and price just gets crazy sometimes, okay? Bart is asking, why did you buy so much further out November? Because I might be willing to hold PTR longer. PTLR is, for me, it's sort of a, you can definitely trade it. You can, 30 days, 40 days, 60 days if you want. PTLR also might be a long-term hold, and I want the space to do that. I want the option to do that. So I don't mind going further out just in case I choose to hold this for a few months. Just in case. Now, I did make a mistake. I really did. I was actually trying to eat a sandwich and drink my Red Bull here while placing this trade. And I was only supposed to buy 10 contracts, but I bought 20 contracts, which I'm okay. Already up $800. So I'm pleased. Real pleased. And that's in the larger account too, Bart. Yeah. Bart, I don't particularly do that. So for everybody, is the recording running? Oh yeah. For everyone, Bart is asking, with that much time, would you ever consider selling shorter term calls against it? I particularly don't do that. I mean, I could do it. I might consider it, but I don't do it. Trading, I like to keep trading so super simple, and that is simple. But I'm pretty much a one-track mind. If you give me point A and you say, Rick, you need to go to point B, I'm going to go to point B. Okay, I'm not going to deviate too much. I I don't stop off. I'm not going to window shop along the way. And I mean, I'm that kind of a guy. And so I'm just stock trading. Now, I come from a background of only trading stock. I've only been trading options for 6 years, 7 years, maybe. So for me, everything is about up or down and be happy. You know, I'm going to bet the stock's going up. I'm going to bet the stock's going down for short. And there you go. Take profits. Well, I treat options the very same way. I only trade simple calls and puts. That's all. I don't want to get fancy. I just want to look at charts. I trade the charts. I love them. So there's nothing wrong with that. It's just not something I particularly do, okay? But there's nothing wrong with that at all. Nothing at all. All right, let's... So we had Van ask, what are the red and green dots? So let's talk about those. Okay. So let's take a look at this chart. And I want to look for a chart that we've got those green dots. We're moving up, right? Then you can see that it was a 3-8 trap earlier today. And I see this happen to a lot of people that trade the 3-8 trap. And I personally think I don't know if it's the best thing to do. I don't think it's the best thing to do. But where they overlook charts that break out of the 3-8 trap, okay? You know, I can't buy this because it's no longer a 3-8 trap. This is a 3-8 trap breakout. What you want is momentum in a chart. You want price momentum. And if it's breaking out, it's got price momentum. So sometimes, you know, just don't look at it as a buy. Where I look at that, that's a good buy. Now, I'm going to wait till the end of the day because we've gone too far in the middle of the day, and you just don't know what the end of the day is going to bring. So I'll wait to the end of the day for something like this. And this is one reason I don't use the 3 on the chart. I know it's there. I might use it in my scans, not this particular scan, but if I see the 3, all of a sudden it's like, oh, maybe I can't buy it. That's the reason I no longer use stochastics anymore, is if I see it, I can't help not to, you know, if it's there, I can't help not to look at it. And that will help sway my trade decision, which I think is a horrible thing. Horrible thing. So anyway, this is why I don't use the 3 on the chart, and now just read the chart. Is that a 3-8 trap? Darn right it is. Is it above that 3? Maybe, but it looks like it's breaking out to me. And that's what I want. And then I want it below I did get sidetracked there. I want it below the highest high in the past 5 days. So really what I'm looking for is a trap above the T-line or the 8 EMA and below the highest high in the past 5 days. That's what I'm looking for. So I'm looking for this to wind up in this area right here. Wind up in that area. Let's see, what's this, Schwab? Look at KWEB. Now, but that one's a gap. But it's below the highest high in the past 5 days. And you could call it a 3-8 trap. Actually, I doubt it is a 3-8 trap now that I think about it. Yeah, it's not a 3-8 trap because we pulled too far back and that brought the 3 down. So here's a case where somebody would never even get this on their scan. If they scanned for a 3-8 trap, they would never trade it. If they saw the 3, it was all wrong. Now, outside of it being a China stock, don't anybody give the chart shit for that. Just undo your typing right now. You look at that chart, what is wrong with that chart? And I would say not one stinking thing. Beautiful chart. Doing just what you would want it to do. Up to a high, up to a pullback. We're gapping over the T-line and the trend indicator. We've got that downtrend line we're over. Isn't that what you would want? We're below the highest high in the past 5 days. All is good. Make sense? Holy cow, my PLTR. Oh, it was up higher a minute ago, actually. So I just got excited. A little excited. What's that? CBS. Hey, everyone. Hey, I'm going to wrap this video up, and I want to say thank you very much for joining us today for our open house. I absolutely appreciate it. And I do want to remind everybody that on Sunday, the 29th, we're going to have a onboarding fast track kind of webinar to go through all of our systems that we use, answer any questions. It's $7, but the $7 gets you a 30-day trial as well. And by the way, a trial member is full membership for 30 days, okay? So again, thank you very much. Check out and grab that link for that $7 trial. Get registered, and we'll notify you with the login information for the June 29th, Sunday, 6 p.m. Eastern webinar. Okay? Thank you, everybody. Appreciate it.